Hi everyone. I'm Toby Turtle, the official mascot of STO Summit Spring 2025. We're excited to share the recorded sessions from the world's leading summit on security tokens and real-world assets. Now, let's dive into today's talk from one of our global leaders. Hey Augustine, over to you.
Let's now hear from Nicolas Keller, COO and co-founder of Elevex, on tokenizing real estate investment opportunities.
Try to keep it as simple as possible and not get too technical on these things because they can very quickly head in that direction. And I'll try to keep it fairly short. So basically what we're going to cover here is how to tokenize real estate investment opportunities. I think that it's tokenization of real estate is a really hot topic now, and I think it's been growing over the past couple of years. I actually think that probably real estate tokenization and the discussion around it was an early theme in crypto. So the narrative had already existed around like 2017. There was quite a lot of chatter around it, but I think that it just wasn't the right time then because it was too early and crypto adoption still wasn't there. Regulatory frameworks weren't in place. So what we've seen, I think, over the past couple of years is quite amazing and bullish towards this space, with institutions jumping on board, which is always a huge pull to bring in retail investors and developers and so forth who are looking to tokenize. I think it just gives them that trust and confidence. So that's really been awesome to see over the past year or so, a lot of the main institutions jumping on board. Also, there's just been an increasing demand in crowdfunding, so that keeps growing year over year. Crypto adoption, people leveraging blockchain technology, the applications being built out, everything is just continuing to expand and showing that this space really does have a lot of benefits and use cases. And so I think that, it really makes sense to bring on chain real estate. I mean, real estate in the end of the day is a $326 trillion market. And the predictions are that by 2030, there'll be about 3 trillion of that tokenized. So there's definitely a lot of opportunities. I think that there's probably not even enough tokenization platforms yet, even though maybe you've heard a lot of people saying they're tokenizing real world assets, etc. I think that the markets are still so big and there's so many opportunities that there's space for everyone. So hopefully throughout this presentation, I can give you a little better insights on some methods of how this works. So what are the benefits? I'll just cover some of the problems that exist in real world today when trying to access real estate investments. So you have things like high capital requirements. So if you're a guy who just has maybe 20K in savings, you don't really have a place where you can access, good real estate investment opportunities, as well as even trying to find where those real estate investment opportunities are, right? So I think that this is really going to help, let's say, middle class, lower class generation and wealth spot where you can actually easily access these investment opportunities, just like you're able to invest in stocks today, right? If you want to invest in Tesla, you download Robinhood and it's super easy, right? So why shouldn't that exist for real estate, which is an asset class, which is one of the largest in the world? And so I think that the tokenization is just like a doorway in, or a path that opens up the ease of allowing people, retail investors, etc., to access this investment opportunities. And it gets rid of that gap of, the traditional mindset of, oh, you need to have 200K in savings, you're going to take a mortgage. And so I think that's really the main issue here, and something that tokenization of real estate will help to solve. So this is a little bit more of a technical diagram, and this is probably as well, I'm sure this will be posted on YouTube afterwards. So maybe it's something for more tech savvy guys who are interested in kind of how the flow of funds work, and so forth. This is an example of how we operate. But I think it's interesting to have a high level overview of how the flow of funds and tokenization works and so forth. So I'll start from the left. Um, Basically, an investor can just create an account just like they do on any Web2 platform today, except they'll have to pass KYC and AML, which is standard in all fintech platforms today, anyways. Then what we like to open up is the opportunity for people to invest via fiat or crypto, because in the end of the day, I think a lot of people who are building in the tokenization space just think about the crypto audience, but the crypto audience is still fairly small in comparison to traditional investors. So I'd say that when you're looking at real estate investment opportunities, the majority of real estate investors today are traditional and they don't really know anything about crypto. So um, I think it would be a great opportunity loss if you weren't to include fiat rails into your tokenization solution. So we like to make it as easy as possible, including things like digital IBANs, self-custody wallets. So it's super easy to go in and out of crypto and fiat and interacting with your bank accounts without being blocked and so forth. Um, then basically what happens is once you invest, you have like an escrow contract. So the best way to put it is if there's $1 million that the real estate developer is raising, then until that $1 million isn't reached, the money sits in an escrow contract. And once the $1 million or the target fundraise is reached, then the token shares are minted and sent out to all the investors automatically. And if it's not reached, then the smart contract just automatically refunds people. So instead of, the real estate developer getting all the money into his wallet from the beginning, which is obviously a risk, we rely on, the beauty of blockchain and smart contracts and provide those types of insurances to investors. And so I think if you're building on tokenization platforms and thinking about real estate opportunities, investment opportunities, it's very important to consider who is your target audience? Like, are you catering to just more crypto degen people, or are you catering to also traditional investors, making sure you're thinking about, okay, what are they, how are this audience type, what are they used to interacting with on their platforms today? And then obviously leveraging the power of blockchain and the benefits it has to offer that security and insurance to your investors, which I think is really cool. There is still some offline things that you have to do. So, like when the real estate developer, for example, actually gets paid the money to then go and carry out the project, they still have to withdraw that to their bank account, and then they have to, pay whatever they need to pay their management companies, etc. And then when it's time to pay out investors, they still have to then onboard that back into their crypto wallet. But once it's in their crypto wallet, there's amazing things that you can do as well, which is great, which is like automate all of the payouts. So let's say you have 1,000 investors, instead of a real estate developer having to have a spreadsheet with every investor, their IBAN information, banking information, etc. Now you can create solutions where you just deposit on their wallet, click a button, and automatically it sends, the payouts to those 1,000 investors. So, I mean, I'll leave this a little bit as well. You can look more into depth after, and we'll share everything as well on our Twitter. But I think another really interesting topic and a question, to be honest, I get a lot when uh, talking about real estate tokenization is like, okay, but how do you actually bring the real estate investment on chain? How is it real? What security do I get as an investor for holding this token? Which are all valid questions, because I think just a couple of years ago, as I mentioned in the beginning, like 2017, etc., this wasn't something that was clearly defined. But now I think there's a lot more regulatory frameworks and a lot more proven cases of great models that are working. These are two examples. So there are many more, ways to do this, but these are two very used examples. So one is doing it through just like revenue sharing, so giving revenue sharing rights in an SPV. This is more favorable, I'd say, to the developers or the issuer, so whoever's tokenizing the real estate investment opportunity, because obviously it's slightly higher risk to investors because they're only holders of revenue sharing rights. So usually this type of structure would have a higher yield to try and attract investors to it because it would be slightly riskier for them. A more advanced structure, and just on that, another benefit is that that is obviously a lot cheaper to set up. So if you're starting with a really little budget and you're kind of bootstrapping, probably you'd go in that direction. If you have a little bit more capital and you want to offer your investors a lot more assurance and security, you could set up a bond structure. So basically, what you're doing here is you're wrapping the SPV that owns the actual real estate assets into a bond. You're tokenizing that. And then in case anything ever happens, like for example, if the developer goes bankrupt or there's a count of fraud or something along these lines, the investors can literally have a claim on the equity shares and the underlying assets that are owned by them. So if the government takes it through a bankruptcy process, you'd actually get paid and they sell that property that was owned by the developer. You, as an investor and a holder of that tokenized bond, would actually get money back on that, right? So that is a little bit more complicated of a structure, but it gives a lot more security to your investors because they know that they have that as kind of a safety net in case things don't go as planned. There are, as I mentioned, several other structures. It also depends on your jurisdiction, um, but those are two common ones that are being used right now. So this is a more visual look. I mean, this is the example that we have because we focus on real estate tokenization, but I think it's a good template to kind of visualize how this plays out in case you're building your own solutions. Um, just basically being able to easily aggregate real estate investment opportunities. So you put that all in one place and making it accessible for somebody who's maybe they have no idea where to find investment opportunities. Now that you can aggregate that all in one place, you can then put all the information, etc., about the real estate investment opportunities on like a landing page or a launch pad style product. And I think what's really interesting, which you don't have on the traditional side, which I think is probably one of the main benefits of tokenizing these assets, is the secondary trading market. So, traditionally, if you invest in real estate, you'd in like a 2 or 3 year project, you'd be stuck in that project for 2 or 3 years unless you find an OTC buyer. Whereas now, the benefit here is that you can create liquidity pools or you can integrate with other DeFi marketplaces, etc. And you can give that opportunity for retail investors to exit at any time. So I think that's a huge benefit of tokenization and something if you're looking into the space to definitely look into because it's one of the main benefits for investors switching from kind of traditional experiences to tokenized experiences. So for a developer as well, you can make it super easy for them to issue tokens and manage their project. So as I mentioned, nowadays, if you're a real estate developer looking to tokenize your assets or you're here to learn about investment opportunity and tokenization, you're probably used to using a lot of spreadsheets, having a lot of headaches with like, what legal structure do I do? Which licenses do I need? So the benefit of tokenization platforms is they can basically automate and simplify all of that for you. So you can easily, handle payouts, fall underneath the platform's licenses, and basically tokenize your projects within a couple of steps, like 3 or 4 steps. So I think that it can be scary when you hear real estate investment tokenization as a developer starting out, but there's actually it's already been very simplified and made to be very easy to follow along and in process. So there's definitely a lot of benefits here for developers or parties interested in tokenizing their real estate opportunities. The last thing is like, and this is more just a general slide that we have and use, but the point of this is that in real estate investment tokenization, the name of the game is definitely getting licenses and following regulations. I think that in the crypto space in general over the past years, and if you're a degen and so forth in the space for a while, it's always like, I don't want to do KYC and I don't want to get licenses, and how can I get around being a securities token, etc. And I think that the RWA space and real estate tokenization in general is very much like we know that we're securities and we know that we need to get regulated and we need to give those assurances to our investors and so forth. So it's very important to look at your region, where you're tokenizing your assets from, who's your regulator, which licenses will you need for those. A couple of tips, maybe if you're starting off, is that, and you don't have a lot of capital or you don't have a lot of time to wait, you can always make partnerships with existing licensed platforms. So that's a easier and faster way to get around it. But if you want to long term, I think be in this space or be a tokenization platform, etc., definitely you'll have to go through the long but worth it process of getting your own licenses. So yeah, I'd say this is definitely a key point and something that you need to consider before stepping into the space. So how do you monetize these types of platforms? And this is where I'll wrap things up because I think we're probably near time. But it's quite easy and straightforward. I think a lot of crypto platforms, when you're dealing with like DeFi space or gaming, etc., you need to have like 30 different revenue streams and it's all a mess. This is very straightforward and standard. Usually you take like a percentage commission on capital raised. A lot of platforms also take like assets under management or assets under administration. There's different ways of calling it fee. That can be for like if you're also a custodian of their assets, use of your software, compliance, investor, legal contract storing, and things like that. And then a lot of platforms also take a tokenization fee because, like I mentioned, if you're, for example, a real estate developer, you're probably not going to know, or a lot of them won't know the setup that they need, the subscription agreements that they need to set up, how to handle the KYC, KYB. So it's definitely useful if you just take a upfront fee probably there and you manage all of that for them and just make it super simple. So those are the three main ones. And then lastly, if you do enter the secondary market with features like you enable secondary trading or you have a marketplace where you allow your retail investors to buy and sell on secondary market their assets, you can also take things like a swap fee, which is pretty standard for any exchange or marketplace. So that's how you would monetize a product like this. And if you're looking to tokenize, this is something to consider if you're looking to work with a platform on how the monetization channels work. That's a quick resume of how to tokenize real estate investment opportunities. If you guys are interested in learning more, you can always reach out to us on Twitter, etc. And if you need any help with tokenization, we can also help you out there. So yeah, thank you very much.
Thanks for joining us at STO Summit Spring 2025. Stay curious, stay connected, and remember, the future is tokenized.